All right, what's going on, everybody? How are you guys doing? Welcome to FxProNow.com and welcome to another daily chart breakdown where I show you the ins and outs of what I'm personally doing on a day-to-day basis in the markets. Our goal for our channel and of our company is to go ahead and help you to get you to the point where you don't need signals, you don't need help. You can be able to do this all by yourself and be able to grow your account with confidence over time. And if you are the person that's also looking to be able to grow your account over time, go ahead and click on the like button so that we know that this is a video that you want to continue to see over time. And if you want to be able to go ahead and leave a comment and let me know a little bit about you and about your situation, I can be able to see how I can personally help you out. All right, guys. So what we're going to be talking about today is EURUSD, and our specific topic is going to be why you don't want to exit out of your trade too early. Okay, this happens all the time, and I want to make sure that you guys understand when to exit and when not to exit. Okay, so for this particular trade right now, we're talking about EURUSD. I'm personally up 127 pips right now. I entered into this trade here. I just want to make sure that I go ahead and make sure that this is at the right location. I entered into this trade at 111498. So this is when I entered into this particular trade, 498. All right, so this is when I entered into the trade. I don't think it was. Let's see, when I actually entered in, the date was the 31st, so it was over here. So let's go ahead and drag this out, and I entered in on this side over here, so 31st, somewhere around here. Okay, so this is when I entered into this trade, and here's the thing: there's times where we'll be up a lot, right, and we see small things into the market, and we will generally get out of the trade just because we're up, but that doesn't mean anything. Okay, just because you're up a couple pips, 30 pips, 50 pips, even 100 pips, doesn't mean that you should get out of your trade, right? It's not really about the pip movement. It's about the move in most cases, okay? So let's go ahead and go to the daily time frame because this is the daily time frame's move. And with that being the case, this is going to be a longer term move. I think this is, let's see how long this particular trade is supposed to be. I forgot exactly. So either way, this is how it is. From the last lower high, based upon the higher time frame, right? So this is point A, you got point B all the way down here, point C right here at 50%, and point D is supposed to be this negative 27% over here. This is supposed to be, for now, about a 400 pip move. So here's the thing, guys. I want to stress something real quick. The fact that price is literally kind of in no man's land is kind of all right. I would have loved it if price got to 61.8. I would have loved it even more if 78.6 was hit. Here's the thing. I'm like 30-40% sure, and I don't want to say the word sure. I'm 30 to 40% something that price may stop somewhere around here and then start pushing upwards. Okay, I think that's what price may do. I'm not stressing it. I'm up 120 pips, cool, but I think that's what price may do, where it may do something like this: point A, point B here, point A, point B, point C, get into like 61.8. Go figure, confluence with this daily key level right here, getting to this area right here. Let's say this green box, somewhere in this green box right here. I wouldn't be surprised. Price may get into here, 50%, 61.8, somewhere into here, and then push up and not go straight there. But then we will have an even longer move, which is great. Okay. So with that being the case, I just wanted to kind of put that out there that this may be the case. This may happen. The computer's getting kind of hot. All right. So either way, that's not really what I wanted to talk about, but I just wanted to put that in there. Price may stop here and then push up negative 27% somewhere into this region. May be the case, but we'll talk about that when it comes. Anyways, so let's drop down to the lower time frame. So you see the bigger pictures move. This is what we're looking for. Let's drop down to a lower time frame to see some stuff, see what's going on. All right. So if we were to go and see where we entered in, and why did we enter in? Well, on the lower time frame, we saw that there was a double top. We saw that there was a level of resistance right here. We saw breaks in structure happening in this region over here, and we saw a bearish engulfing pattern right there, and we saw more bearish candles pulling in. I entered in here, and this is where I felt like, you know, the bearish engulfing pattern happened. I felt confident. It was mostly a confidence trade. Price kept pushing upwards. Doesn't mean nothing. Doesn't mean a break structure or anything like that. Price pushed down. Price put back up. You know, I'm in the negative. So what? Boom, 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 boom. All right. So this is what tends to happen. What tends to happen is getting into a region just like this one. Into a region just like this one. Someone would say, "Oh, we're at a level of support. Price is gonna push up. Let me get out and collect my pips." You know, price is at some level of support right here. I don't know. People always have, you know, something. This happens to me all the time when I was first getting started. Oh, I see that price got to a level of support, bullish candle, and starts pushing up, pushing up, pushing up. Oh, I don't want to lose my profits. I don't want to lose my profits, and I get it. I understand. I 100% do understand. All right. Let's go to a lower time frame so we can be able to see a little bit more. So, you know, this is where we entered in. Price pushes down, pushes up a bit, and then whew, consolidates a bit, and then from there you see probably on the lower time frame, see these, you know, higher highs forming and stuff like that, and it could be kind of scary because here's the thing, you know, you're losing money for 20 hours, you know, 16 hours for a full day. Your account is going backwards. And that could be kind of scary, and I definitely understand where you're coming from. Although it's best to focus on the main move. And what is the main move? Well, the main move is the daily time frame. The main move is point A, point B, point C, point D all the way down here. You can't even see it. All right, point B is all the way down there. Right, so focus on that more than just, you know, you losing a little bit of profits. You know, or saying, oh well, you know, I still am focusing on the main move, but what I'll do is from point A, point B, you know, I'll wait for price to, I'll get out here and wait for price to come back over here and then get in again. Don't do that. It's happened to me all the time. Right? Focus on the main move. All right. And what tends to happen as well is our rule is, you know, from point B to point C, from point A, B, C, if price gets 38.2 and then holds and then continues, you hold your trade. There's times where price will, you know, get to here and you just want to close out because you just don't want to lose your profits. But it's okay. I understand where you're coming from. You know, you want to be able to get every single cent. I get it. It's best to just hold your trade because as you can see here, price went from point A, point B. It didn't really make a true point C. It went to 23.6, but you held your trade. Price pushed down. Price came back to the area, right? And because you held that, boom, boom, right? Another thing that will tend to happen is we'll tend to say, okay, cool. This was the last high. I'm gonna go ahead and put my stop loss, you know, just in case, you know, price, you know, something. And I'm gonna put it right above it. So you know, just in case, you know, price comes and it comes back over here, I don't want it to, you know, break structure and start making new higher highs. That's cool, but you don't want to make it too close. You want to have some space. But here's the thing. Let's say price, you know, didn't do all of this as of yet, right? Let's say price didn't do all of that. Let's go ahead and black this out. All right, let's say price is literally only right there, right? And you say, oh, I want to go ahead and put my stop loss literally right above here. That's cool. I get it. But I wouldn't put it at the last low. I mean, at the last high. I would put it 2 highs above it, right? 2 highs above it. Because the thing is, there's times where price will come in and just wick it. As you can see, this got really, really close. It didn't, but it got really, really close. And probably with, you know, a large spread, you know, it tips that. And then after that, boom, now you're really mad because you lost your entry. And you're scared to get into it again because, you know, let's say price starts pushing upwards a bit, and then you're negative, but you're in the right trade, but you entered in all the way over here. So that's why it's best to get in at a lower lot size than usual, at a 2% risk management. Now, why, where'd that come from, lot size? Well, if you have a lower lot size, you're not stressing about your account. You're not stressing about the money. And because you're not stressing about the money and you're just letting it, because it's so low of a lot size, it's so low of your, it's not really a lot of money that's going up and down um, in relation to your account. You're not really that stressed about the particular trade. So I said all of that to kind of say you want to make sure that you have a proper risk management, because when you have a proper risk management, it can be able to control your emotions. When you can control your emotions, you can be able to make right decisions, where as opposed to getting out of a trade early because you want to hold the money that you have, right? Instead of having your stop loss too tight so that you can be able to make sure you don't lose the money that you have, you can be able to just let trades rock because it's only X amount of lot size, and then over time you can be able to grow your account. So here's the thing. With the fact that we have point A, well, first of all, let's do this first one, right? We have point A, point B, point C, 23.6. Not a price reversal zone, not a true, lower high. So essentially, you got to keep this here, right? Then we have again 23.6, not a true, what do you call it? High. Again, 23.6, not a true high. Keep on bringing it down. Again, not a true high. And we're still going. So I'm letting you know if you are into a trade just like this one, or you're seeing this later on in time and you're in a trade and it hasn't made a true lower high, most likely it will. So the reason why I'm saying that is because let's say we have from point A to point B, right? There's a possibility that price is going to want to find 38.2 at some point in time, find 61.8 at some point in time, so but just because it does that doesn't mean that you should hop out of your trade. If it passes 38.2, probably yes, right? If a full candle closes beyond that, matters on the type of trader that you want to be. Cool, right? But as long as price is not breaking structure, because essentially this portion right here is not structure. As long as price is not breaking structure, you're good money, right? Let's say that was structure. This price is not. Let's say this was a part of structure, even though it's not, because it's only 23.6. Even though it's not even 23.6. Let's say price is not breaking structure. Just hold on your trade. You'll be fine, right? So again, up 150, 125 pips right now, and we're just going to continue to hold this trade. But at the same time, I do have to be kind of cautious because what I said, where there's a possibility, man, I got all these fibs. Just take off all this. There's a possibility from point A, point B, point C, we're at 50% right now. There's a possibility that price may want to find another high. Possibility. And the only reason I'm saying that is because based upon, let's take this off. Based upon this particular fib is only at 50%. It's not really like the deep enough retracement that I'm looking for. And then also we have 78.6 in confluence with this monthly. So it's kind of like, I think price wants to actually go up there. And mind you, this is a very, very, very strong monthly. This is the first real break. It was taking a long time for this to get broken through. This is the first time it actually broke through it. It probably wants to go back and revisit and say, but I miss you. I miss you 1.13. And that's literally what it wants to do. I don't know how it sounds, but it wants to say, I really liked it here. It was home. at 1.13. This is where I feel confident, or this is where I feel comfortable. That's what the market is actually doing. The market says I feel comfortable at this price. We believe on a consensus form as far as like the euro versus the United States dollar. We'll feel that the market should be at this price, and that's what price is doing. It's moving from a stable form at one particular price, and it's moving unstable. Now it's unstable and going to another price where people on a consensus form see that price feels comfortable at a particular price. You know, so that's what the market's doing. So I wouldn't be surprised we'll have that happen. But if not, cool. I got my entry. You know, but what I'm going to be doing, how do I know whether I should stay in or get out? Later on, there'll probably be another video, you know, sharing that story, and most likely it's going to be somewhere over here in the box, right? Later on, but go ahead and check those out. So if you like this video, I would ask you, go ahead and click on the like button right now. What that tells me is, hey, I like this particular video. And if anything, write a comment saying, hey, I like when you were talking about X, Y, or Z, because then I can be able to talk about that a little bit more. Or let me know, hey, I don't really understand when you're talking about X, Y, or Z at this particular time. You can be able to write down the time, and when I click on it, it goes towards that time, and I can be able to know what you're talking about, right? And if you want to be able to get access to more of these videos, and literally right when the video comes out, what you can be able to do is click on the subscribe button. When you click on the subscribe button, and then on the bell right next to it, it will actually send you an alert, just like a text to your phone, letting you know, hey, listen, Philip just came out with a new video. And obviously, the earlier you see these videos, the more you can be able to take action and stuff like that. All right. So I greatly appreciate your time, guys. 100%. You know, our goal is to be able to, you know, help people get to know, you know, trading and how to you can be able to actually learn this by yourself, right? So if you know somebody else that's also looking to get into trading and stuff like that, go ahead and click on the share button. There's a share button right below. Click on that button real quick, and then it could be able to actually have a button where you can be able to go ahead and text it to somebody else, or just copy the URL link, copy that real quick, and just send it to a friend of yours. Hey, you know, I think this could be able to help you out, right? No pressure. You know, I'm just letting you know that, you know, if it's helping you, I'm pretty sure it's going to help somebody else as well. Greatly appreciate your time, guys. I love doing these videos, and I'm looking to be able to do more over time. All right, peace.